Hello and welcome back. Today we are going to cover the recent rally in the markets and if it is going to continue into a full bear market rally as we saw from mid-July to mid-August. We're looking at the dollar, its impact on the market, the VIX, market breadth, and participation. But first, let's recap our latest swing trades and how they've done. First up is AG, First Majestic Silver. So it has been doing wonderful in the last few days since we took a look at this swing trade. We've gone up 33%. So that has been a phenomenal performer, and that is in thanks to the dollar going down. And we're going to cover the dollar here up soon, as it has been having a very important impact on the market. But first, let's look at McDonald's. This trade has also performed well the last couple of days. We're bouncing out of the oversold indicator here. This is the Lux Algo Cloud oversold indicator. So we're bouncing out of that. We've had almost a 5% rise in the last couple of days. So good swing there as well. And lastly, Occidental. It was in the green cloud, and we saw some good indicators here to get in, and so this swing has produced almost 10%. So we're 9.17% increase in Oxy. But why is the market going up? And a lot of it has to do with the dollar. And the dollar has been going down recently, and part of that has to do with the British pound. So let's take a look at the British pound real quick. As the market, Bloomberg says, the pound recovery rages. Strategists expect selling to resume, though. So keep that in mind. And here we can see that the pound has had a good rally. But here's the issue. So we're looking at the dollar, and it is getting close to this 200-day moving average. And it is a number, an average that the dollar has respected in the past. So seeing as the dollar is having an impact on the market, I'm thinking that this could produce a rest in the market or potentially a small pullback before we can see anything going higher. And so we need to take a look kind of at the big picture here and see that we have rallied in the last just few days. In the last 4 days, we've rallied 5.81% on the S&P 500. Now, do I consider that a bear market rally in the sense that we had from mid-June to mid-August? No, I mean this is a strong, powerful bear market rally here, but it is a mini bear market rally, and it's happened so quick. And what we see is, if we look down here, we see that the RSI is pretty extended. And if we look back to when the RSI was this extended before, we'll see that it was right here, which was not a good time to buy, right? Not a good time to buy. And the only other time we were this high was right here. And this is the area of the market, the time frame that I think we're basically replicating to some degree, where we had a really strong rally. I feel like we're going to have a pullback, and we're going to look at the VIX next to see how that's been behaving before we have a potential for a rally. Now, of course, my crystal balls only are so big, so I can say with some confidence that we're going to have a little pullback here. Now, whether we go up from there or down, I think that has a lot to do with the dollar, the VIX, world events, things that are still to develop. So we'll see. I did do an entire video, though, on levels in case we do go down, what levels we might hit. A little hint, it might be right around here, but that video is good, so you should give it a watch. And yeah, so let's get into the VIX and its behavior. On this chart, what you're looking at is the VIX, which is the actual chart, against this orange chart, which is the S&P 500. And so as we see, these charts do typically move inverse to one another, with the VIX going up, right? The market's going down, right? The market went down sharply as the VIX rose. Here we see the market rising sharply as the VIX falls. Here we saw the VIX trading sideways as the market sort of fell. I mean, it did fall, but we had some uncertainty here with this bounce. You can see. Again, the VIX went up, and the market really just tanked. But part of the thing that you see here is the VIX didn't go up a lot, right? Like if this was going to continue to tank and tank the next day, I think we would have saw a much sharper rise in the VIX. Okay, maybe not that sharp, but something like this. But relative to previous moves down, this doesn't seem quite as full a move. And we can see again, how sharp the rally in the S&P 500 is relative to a declining VIX. What we saw today, though, was a little different. The VIX didn't seem convinced in this rally. We continued this rally up today, but the VIX didn't go down, right? I would have expected the VIX to do this, especially if we expect the rally to continue. In my experience, when you have a flat day on the VIX, the next day is either going to be flat or a pullback. And I think in this case, since we've run up so much, so quick, I feel like we're going to have a bit of a pullback in the S&P 500. So something to keep an eye on. So next up, let's look at market breadth. This is another thing that will indicate whether or not we're going to continue this move or turn around. All right, if anything we've covered so far has been helpful, please like and subscribe. It really helps the channel out a lot, and it'll let you see these videos again in the future. I'm going to turn my video off so you can see the charts better. And we have a few things here to pay attention to. So first off this is our chart of the S&P 500. And as you can see, today was kind of flat with a tick up at the end. But the problem is our advance and decline, the ADD, it was flat and then went down throughout the day. So the market breadth was actually selling off. That means more stocks were selling off throughout the day and did not... This rally didn't help lift all boats. And so this tends to be an indicator that a rally is starting to fizzle out. Now granted, there were a lot of names that were up today, but this indicator going down as the market's flat to going up tends to be an indication to me to get out or to start short positions. Another thing is the put-call ratio. We weren't seeing people get strongly into calls here, right? The call ratio wasn't pulling us down. It was also kind of flat. So not a whole lot of excitement about this move continuing. And then as we covered already, the VIX was fairly flat today. It ended down 3.42%, but not really a big move for the VIX there. And lastly, we do have futures, right? An aftermarket in the S&P 500. It is losing a lot of the gains at the end of the day there. So yeah, I'm looking for a short-term pullback in the market. Also, don't forget to check out the video on the bear market and how far it might go down if we do head further in the down direction.